Let's talk about one of the biggest financial traps out there, buying a new car. We're going to show you how a seemingly normal purchase isn't just a bad idea, it's a full-blown six-figure mistake. We are going to run the numbers that the dealerships absolutely hope you never, ever see. And you'll learn how a $55,000 truck can literally drain over $130,000 right out of your life.
So picture this. You walk onto the car lot. You see it, that shiny new truck with a $55,000 sticker price. You do the math in your head, the monthly payment seems doable, you can already see yourself behind the wheel. But here's the thing. That sticker price, it isn't the real price. Not even close. The real question you need to be asking yourself is, how does this $55,000 truck actually end up costing you an absolutely staggering $130,000? Yeah, you heard that right. When you tally up the total cost, we're talking interest, insurance, fuel, maintenance, the whole shebang, over just 7 years, you're not paying 55 grand. You're paying more than double that. It's insane.
And if that wasn't bad enough, here's the real knockout punch. After those 7 years, after $130,000 is poured out of your bank account, you're left holding the keys to something that's worth maybe 15 grand. Just think about that for a second. You paid $130,000 to end up with 15. And listen, this doesn't happen by accident. It's a system designed to do exactly this. Let's break down how they do it.
It all starts with something called the monthly payment trap. And you really need to understand this. It's a clever bit of financial engineering designed to make a totally unaffordable purchase feel completely normal, completely manageable.
So, this is how they get you. You know, a decade or so ago, a 4-year loan was pretty standard. But now, lenders are pushing these 7-year, 84-month loans like they're the new normal. And why is that? It's simple. When you stretch out the payments, your monthly bill looks smaller, and that feels affordable. But it's just an illusion. You're trading a little bit of short-term relief for a long-term financial prison, paying thousands and thousands more in interest and being trapped in a rapidly depreciating asset for years on end.
And that situation has a name. It's called negative equity. It's when you owe, say, $30,000 on your truck, but its actual market value has already nosedived to $20,000. You are financially underwater. It means you can't even sell the truck without writing a huge check to the bank just to get out from under the loan. You're completely stuck.
Okay, so enough with the theory. Let's get down to brass tacks and audit the real numbers. We are going to build the final receipt for that $55,000 truck, the one the dealer never, ever wants you to see.
Let's run the numbers. First, the loan itself. With interest tacked on, that $55,000 truck actually costs you $67,000. Okay, now let's add insurance for a brand new vehicle. That's another 21 grand easy. Fuel? Well, a thirsty truck is going to burn through about $29,000 in gas over 7 years. And of course, you can't forget maintenance and repairs, which will run you at least another $15,000. So when you add it all up, the actual cash that leaves your pocket is $130,000.
And when you see it all laid out like that, you realize you're not just buying a way to get from A to B. You are literally setting a giant pile of your own money on fire. This isn't just transportation. This is wealth incineration.
But believe it or not, the true cost isn't just the money you spent. No, the real damage is the money you failed to grow. This is a concept called opportunity cost, and this is where a bad financial decision turns into a catastrophic one.
Let's just look at 2 different paths you could take. Over here on the left, you've got the truck buyer. They pay out $130,000 and end up with a $15,000 asset. That's a net loss of $115 grand. Now, what if you took a similar monthly payment, let's say $800, and you invested it in a simple stock market index fund instead? After those same 7 years, you'd have over $70,000 in your account. The gap between these two futures, it's just enormous.
That one single decision to finance that new truck, it creates a massive 6-figure hole in your personal net worth. And that's not just a number on a spreadsheet. That's a financial setback so huge that it can take you decades of hard work just to get back to where you started.
But it really does not have to be this way. There is an escape route from this whole trap. There's a strategy that puts your financial freedom way ahead of a flashy vehicle. Let's call it the Wealth Builder's Ride.
And the strategy is actually pretty simple. Step 1, buy a reliable 3 to 5-year-old used car. Let somebody else take that massive initial hit in value. Step 2, pay for it with cash if you can. If you can't, finance it for no more than 3 years. Keep that interest to a minimum. And step 3, this is the most important part, take those massive monthly savings, we're talking $700 a month or more, and invest it.
Put it into assets that actually make you money.
So at the end of the day, it really just comes down to this choice. Do you want to be driving a truck that cost you nearly 70 grand in real money to a job you have to keep just to make the payments? Or would you rather drive a modest, paid-off car to the bank to watch your wealth grow? The choice is yours.